Welcome to our Momentum Cycle Individual by Video. Characteristics of the momentum trade. Are we approaching the final phase of the downward momentum cycle, or is a price correction taking place? Let's analyze the momentum variables. Newton's cradle. In a closed system, momentum always remains constant. The only way to change momentum in a closed system is by introducing an external force. How does this principle apply to financial markets and your trading decisions? Identifying the direction in which an instrument seems to be heading is just the first step. Anyone can look at a graph and determine whether it is trending up or trending down. Therefore, our momentum analysis is paired with an algorithmic process, and the results are then examined within a quantitative and technical framework to determine where the instrument falls within the momentum cycle. Our primary focus is to align with the momentum cycle of the instrument we are following. This means our starting point is always identifying where in the cycle the instrument currently stands. Once we know whether the instrument is trending upward or downward, we can incorporate leading and lagging variables to determine if a new upward momentum cycle is beginning, which would motivate us to buy, or if a new downward momentum cycle is forming, which would motivate us to sell. It's important to note that even the most stable and high-quality companies can experience a downward momentum cycle, which often presents patient investors with an ideal buying opportunity. The length of a momentum cycle can vary significantly, lasting from a few weeks to several months or even years. Therefore, it's unwise to second-guess a current momentum cycle unless a predetermined set of leading indicators suggests otherwise. It's also important to remember that we're not compelled to buy every time an instrument begins an upward momentum cycle or sell every time it begins a downward momentum cycle. Beginning of the upward momentum cycle, phase 1. Understanding the beginning of an upward momentum cycle. A stock that is about to start an upward momentum cycle is often still entrenched in a downward cycle. At this point, the instrument would still be on the avoid list since it's moving downward. The time it takes for an instrument to transition from a down cycle to an up cycle varies. During this phase, our leading quantitative variables are scanning the instrument for any fundamental changes in price behavior. There is no guarantee that any instrument will move off the avoid list, so making a trade at this stage could result in an error. Phase 2. Instrument moves to the buy list. An instrument will automatically move from the avoid list to the buy list once a predetermined set of quantitative variables are met. This allows the trader to properly research the instrument and consider whether any unexpected shocks, fundamental, macro, market, etc., might occur. At this stage, the instrument is placed on a watch list, and buy orders can be set at predetermined price levels or timed intervals. Phase 3, progression from buy list to positive momentum. At this stage in the instrument's life cycle, it begins attracting various types of traders, day traders, short-term traders, swing traders, etc., who aim to buy and sell based on the recent price action. Common wisdom suggests that if enough momentum is driving a stock price in one direction, it will likely continue moving in that direction for some time. Phase 4. The final phase of the upward momentum cycle. If the instrument continues its upward momentum, our system will indicate that it has moved from the positive momentum list to the stay long list. Essentially, this means that the market is comfortable holding the instrument and will continue to add during phases of price weakness. At this point, a prudent trader will invest, ride the trend, and avoid second-guessing the market. It would likely be a mistake to react to minor downward price movements and sell in a panic. Predicting that the instrument is about to drop while on the stay long list could lead to forfeiting a profitable position. One of the most basic mistakes any investor can make is to cut their winning trades and hold their losing trades. A momentum trader will continue riding the trend until market indicators clearly show that the instrument is shifting into a downward momentum cycle. Analyzing the variables. Point of departure. We will focus on Heineken N.V., a European-listed stock in the food, beverage, and tobacco sector. Step 1. Study the graph. Get a feel for the trend and ask yourself, what is the likelihood of a price correction? But more importantly, try to understand why the market has allowed the instrument to reach its current levels. Step 2. Trading variables. Determine the current length of the momentum cycle in days. In this case, the momentum cycle has been negative for 58 days. What is the current status of the momentum cycle? The momentum cycle has shifted from the avoid list to the buy list. The key question now is whether the instrument will move upward with a positive momentum cycle, or if this is it, just a short-term price correction. The important contribution of the guided factor. The length of the momentum cycle determines the guided factor. The selected guided factor here is the 33rd day, as the current momentum cycle has been negative for 58 days. Step 3. Planning your trading implementation. When planning and researching a trade, we use the variable preceding the recommended guided factor as the point of entry. In this case, we will use the 9 versus the 21-day moving average as our point of departure. Once we receive a research trade signal, we will closely monitor and plan our trade. Once we have confirmation that the 9 versus 21-day moving averages have crossed, we will begin opening our trade. It is always recommended not to open your entire trade on the first day of trading. You will get confirmation that the price has moved above the 9 versus 21-day moving average when the values shift from negative to positive. Expect increased volatility in the early stages of a new momentum cycle. Remember, there is no guarantee that an instrument will move smoothly from a positive momentum cycle to a negative one. Always monitor and follow your strategies closely. We have come to the end of our basic explanation of an individual buy momentum analysis. We encourage anyone to visit thetradingforest.com for more educational and trading-related videos and reports. Many thanks for your participation and interest.